Global equities enjoyed a stellar rally on Monday, with European stocks posting their best day since early May. The DAX skyrocketed by 5%, while the CAC 40 in France jumped by 7%. Positive vaccine results from Pfizer and the presidential victory from Joe Biden fueled risk-on sentiment. But can the optimism continue? Joining me to discuss is Serge Berger from thesteadytrader.com. Serge, great to chat to you. Now, there's so much risk on sentiment that's driving markets higher both Monday and Tuesday. However, on the flip side, gold, the risk off proxy, appears to be suffering quite significantly. It had its worst session since August on Monday, and we're now back below $1,900 an ounce. Talk to us about a potential trade here. Do you see us heading further lower?
I think, in the immediate term, and I think you and I have discussed this in the past a couple of times, I think gold is, in my opinion, at least for me, very difficult to time. But I do think what happened here over the past 24 plus hours is really an algorithm change, where the algorithms had to flip their own machines, basically, where you had a massive trade yesterday where it was basically long value and short tech. And I think the algorithms flipped in the same matter in gold. I do think nothing's really changed, if you want to call it fundamentally, in terms of what the bull case would be for gold. If anything, this is a buying opportunity, and for all I know, it may be the last buying opportunity before it really starts moving higher, because the monetary debasing, which is really the trade that most people are focusing on around gold, potentially at some point some inflation scare, I don't think that has gone anywhere. That's still out there.
Okay, so what are some of the key levels on the chart that you think we should be looking out for on gold?
I mean, look, I think you can draw some simple lines here. I think the September lows, which is more or less what we got to yesterday, it's around 1850 or so. Again, give or take, a few dozen points is probably as good a level as anywhere. Can we overshoot to the downside and potentially even hit, 1800 or maybe overshoot to the downside? It's entirely possible. But I think at the end of the day, the bullish rotation, the institutions we speak to, there's very much still a risk on appetite in terms of risk on for gold. So, cannot overrule or rule out any more dip, but for the most part, I think a good opportunity to look long here.
Okay, so if we're talking about risk, I wanted to get your view on Bitcoin as to whether you think it's sort of a risk on or a risk off asset, because we know it's risky, but sometimes it acts more like a risk off proxy, similar to gold. We have seen a little bit of give back this week as global equities have seen a considerable rally. But despite that, I mean, since those lows in March, at least on the IG platform, we've seen Bitcoin rally by as much as 300%. I guess my question really is, where are we heading next? Do you see $16,000 as a level in sight?
I do think so. I mean, when you use the word risky, I think in terms of Bitcoin particularly, it really refers to not so much necessarily downside risk, but volatility risk. And volatility risk is very much the name of the game when you look at Bitcoin, which is also when you were long Bitcoin and gold in portfolios, we're going to be less long Bitcoin just because of the volatility, the volatile nature of it. I do think 16,000 very much is in line. In fact, you can see I set some alerts on there on that. And quite frankly, I wouldn't be surprised if we see 20,000 rather soon in a matter of a couple of months. It's entirely possible. But again, given the volatility of it, I wouldn't be surprised if we see 12,000 before 20,000. So I think that's an important game, which is really why to us it's more of a long-term hold. Understanding the reason why people are long this thing, very similar to why people are long gold. And it is a bull market. And I think the most difficult thing to do in a bull market is to actually hold on.
Okay, let's talk about the real dramatic price action that we've seen in equity markets this week. When we look at the DAX, it was up by around 5% on Monday. Today, it's pretty much flat. So a little bit of profit taking potentially, not necessarily extending those gains, but certainly holding on to them. But that's slightly at odds with what we're seeing in terms of the FTSE in London, which continues to march higher. And it's interesting because the FTSE actually has been underperforming the DAX since those lows after the global market sell off in the first quarter. Talk to us a bit about where you see price action heading for the DAX from here.
Yeah, I think for the DAX, if you're going to be very simple in terms of technicals, which is probably what you want to do right now, I think you have very well defined upside, limited upside, maybe 13,500-ish. And it would probably take quite a Herculean effort to break much above there. That would be my immediate sort of upside target. Can we back and fill and kind of digest the past couple of weeks gains, excuse me? Absolutely. But I think if we're to get to 13,500, 13,600, maybe, I think the odds of us blowing higher there without ever looking back are probably quite low at this point. We'd need to see probably more better news or more further good news on the vaccine front would be my best guess.
All right, and then finally, in terms of US equities, we saw the major averages hit record highs on Monday, but actually the Nasdaq, the tech-heavy Nasdaq, which has been an outperformer lately, was actually the underperformer and closed in the red. Why is it that the tech sector appears to be lagging?
Yeah, so this is really it's definitely the most, I think, promising opportunity out there. We've been talking about this, positioning ourselves and clients for the past 2 months now for this. And that's really a rotation marginally out of mega cap tech and out of other beneficiaries, if you want to call it that, of COVID. So you saw, for example, yesterday, anything Nasdaq heavy, and of course anything directly having benefited from COVID, like Zoom, Peloton, down meaningfully. On the flip side, you saw rotation back into, or finally back into things that are more real economy related, airlines, cruise lines, those kinds of things, and even banks to a good degree, which we think has really just been now the beginning of a rotation that's going to continue for many months. It's going to be volatile, though. I would not be surprised if we get, vaccine news and all sorts of things that are not as good, and then it'll be a choppy road. But I think this rotation's real. We see it taking place. We're doing it ourselves, and I think it is going to lead to a lot of underperformance, relatively speaking, of the Nasdaq heavyweights through the lens of the next 3, 6, 9 months plus, which is not to say that we think they're going to fall apart, just not outperform. All
right, Serge, great to chat to you as always. And that was Serge Berger from thesteadytrader.com joining us from Zurich. I'm Victoria Scholar, and thank you so much for watching IGTV.
For more videos like these, subscribe to our YouTube channel, IG UK, and make sure to follow us on Twitter. We're at IGTV.